Hey, this is Cole from Lifetech. Congratulations on getting to the second to last calculator. This is the legacy calculator. Again, so fired up about this calculator, fired up about all of them, but now we're actually starting to close the loop on the Child Millionaire program. I'm going to tell you how. Promise that when you are sitting with a client, you are in the business now of showing up different. You are in the business of adding value. You're in the business of not confusing the mind by selling from spreadsheets. You're in the business of providing tactile tools, a very unique, engaged process where you're now in a digital world sitting across from the client in a Zoom room, in a platform like Google Meets, what have you, and you're actually handing the controls of the tool over to the client for them to walk through and have tactile control of their dollars. They're using $1 3 times. With Child Millionaire, they are using $1 in their life, in their child's life, and their grandchildren's life. In this video, we're going to talk about how that works for the children specifically and the grandchildren. The first 5 tools, excuse me, are literally built around how to give the owner of the policy, which is essentially your client for the most part, control of the dollars flowing through their life through the lens of a child by writing the business on their children's life. Again, in a life insurance contract, there are 3 actors. There's the life insured, there is the owner, and then there is the beneficiary. There's 3 actors. $1 is serving 3 generations, properly designed. Now, keep in mind that your one policy is actually likely going to turn into 3 policies, provided you're telling the right story. And what does that mean? Simply put, parents that are the owners of the policy who are insuring their children, who can also be the beneficiary, also need to have life insurance. They have to have 50% more life insurance than their children do. That's just the way the Life Insurance Act works across North America. So now, not only are you selling a policy to the child, on the child's life, now mom's life, now dad's life, and it can just be a simple term policy that you can then think about converting into whole life for becoming infinite banking or even cash flow hacking. And you're seeing in this video a whole bunch of stuff about cash flow hacking. So let's dive into the legacy component of this tool. And just a quick thing, I'm actually sitting in this room today. I'm actually at the Cove in Atlantis today, filming this video. I hope this is inspiration for you. Out here to my left, there is a world of Caribbean ocean and playground of water slides and all kinds of ridiculous things. My wife and I, Kate, are just actually now starting to work remote again. This business is amazing. I hope this inspires you. You can work from anywhere and do this business. If you structure your agency properly, your relationships, your licensing properly, you can in fact work from anywhere and still serve the infinite banking process and serve children and the Child Millionaire concept. So yeah, I'm here. I'm not really on vacation. My life is a vacation, and I hope you design yours that way too. So let's dive into the tool legacy. What does that mean? Again, up here, let's just go through the tools really quickly. Follow my mouse. Contributions, the investment. We talked about the home. We talked about income property, the lump sum investment if need be. That was the story about the child in Guatemala who decided to get back to work at age 50. And now finally, legacy, using that $1 3 times. This is the one that counts. This is the long-term thinking. So let's take a look right out of the gate. I always call this the cherry on the sundae. Yeah, by the way, we are talking about life insurance. You can remind your clients we're talking about life insurance. Once they start to get it and they see the power to control the money, to use it as an asset, to use it as low risk leverage, to engage your clients into what's possible, at the end of it, you can remind them, yeah, this is actually life insurance. This is whole life insurance. There's too many people marketing this as something that it's not. We need to just market it as life insurance because that's what it is. It's whole life insurance. And the beautiful thing about whole life insurance is that after the offset year, it's guaranteed. It's permanent. That offset year is somewhere, depending on how old you are, your rating, 5, 6, 7 years, somewhere in there. But you can guarantee that as long as you can make your premium payments up until that point, This is going to stick with you for life, and you are going to leave a legacy. Your clients are going to leave a legacy to their children. You are going to leave a legacy as the advisor in the client's mind, because you are the one that added the value. And I get fired up about this one just because, I mean, think about what it's like to be born, for your children, for your clients' children to be born into, literally in this case, for measly $500 a month at $120,000 total contribution over 20 years. It's not a lot of money. At age 75 alone, the death benefit is almost $3 million. Think what that would look like for that child's future. Very, very powerful. This tool is very, very simple. All we do is we move the slider down. We talk about what's possible from $50 a month. And again, at age 75, we're not pushing this out. Keep in mind, if you look at these actuarial tables, in the United States, these push these things out to age 121, and in Canada, age to 100. We're only illustrating here age 75, due to the fact that, you know, we want to, again, make it tangible and show people what's possible. God forbid they graduate from this earth at age 75, or God forbid age 65. There's still, even at $50 a month, for a total here of $12,000. And this is $12,000 that the parent, the owner of the policy, has control over. It's an emergency fund. You can come to Atlantis, where I am, use that money, go on a vacation, whatever you want to do with that money. Buy Bitcoin. That's not financial advice, by the way. None of this is financial advice. This is living advice. That's what this is. All right. Because I do it. This is what I do, and this is working for me. All right. So age 65, $50, 182,000. Age 75, at $50 a month, $224,000. Okay, so we're just going to move the slide along. And again, tactile tools. What are you going to do? All you're going to do, really simply, is you're just going to hand the controls over to the client. Let them walk through this. Let them experience. And as the client is moving through this, all you have to do is make notes. Where did they ask their question? What value? What dollar amount? Did they ask questions around value 100? Did they ask questions about 500? Where did they move their mouse? Where did they move the slider? Did they come all the way up here to $500? Well, it gives you an idea possibly about where they're at emotionally and where their confidence level is. And now if they're hovering way down here at $50, then you need to kind of get into a deeper conversation about the problem. And that's the key thing, is when you're talking to clients, identifying with them what the problem. Often people don't know what the problem is. They think that they're just broke. That's not the problem. The problem is that losing control of the money coming through their life. And what that means specifically, they are losing control of compounded interest. It's working for them, working against them. They're missing out on the opportunity to have it work for them. That's called opportunity cost. There is no opportunity cost. Let's just say at $200 a month, when your clients graduate from this earth, which they will, paying out at age 75, $1 million to their beneficiary. The most important thing about this video is not the money. The most important thing about this video and this toggle is the stewardship. We often want to say to our clients that financial literacy is dead. Financial literacy has gotten the average North American $200 away or less from insolvency. The future is stewardship. We need to have actionable behavior that is duplicatable. We don't need to understand necessarily why generations before your Child Millionaire clients used whole life insurance. They just have to do it. They don't need to understand it. It has to become the new normal. Imagine a world, literally, where every child born in to North America, parts of Europe, where there's whole life insurance policies and where they exist, participating whole life insurance policies. Imagine every one of them had the opportunity for $50, $100, $200, $500 a month on their life. What would that look like for their life? What would that look like for the parents' life? And what would that look like for the grandchildren's life? More importantly, what will that look for your life? You're the advisor. Why not get wealthy, have your cake and eat it too, and serve people at the same time? Where do you get to do it? That's a dream come true. I'm describing a dream come true, a utopian dream come true. It's not too good to be true. Again, the product has been around for 250 years in the USA. It's since 1847 in Canada, doing one consistent thing: paying a dividend and giving back control. All right, right away, what I want you to do, pick up on my energy, click the last video, click the last button, go to the seventh video in the Child Millionaire tool. We're going to explain how we wrap this whole thing together, and it is going to blow your mind, because now we're talking about that S word again, and it's not a 4-letter word. It's called stewardship. We're going to break it down right now. Okay, go click that video.